Hi traders and welcome to the Technical Analysis Market Watch on Friday the 21st of April. So we saw a pretty flat start to the week on a lot of the indices and the majors, but we've certainly seen some weakness kick in the last couple of days. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that after a move last week that pushed up to the 200 moving average, we were quick to return back to this base where we've got a lot of price action. So this level that we're talking about here, around that sort of 67.20 zone, is very, very highly congested. You can see we've got moving averages 20 and 50 bearing down on this level, effectively nearly basically running parallel. And you can see all of this price action right through here early in this year and late last year. We're really stuck in a zone here, and until we actually break past a particular point which really in my mind is around that sort of 68 cent mark, we need to close above that 68 cent. Now it nearly got there the other day but failed to do so, but until we get that move, it's going to be very difficult to see this breaking through and actually starting to aim up for the 70 cent mark, which I think is where it will go if we get any sort of momentum whatsoever pushing up. So realistically, you've got to go to the smaller time frames to understand this. We are no doubt in the channel. You can see here that we've got higher highs that reach this point here around that 68.80 mark, and then we've also got the lows at around that sort of 65.80 mark. So we've got a 300-point range where we're definitely congested, but we can basically break to either side. All we need is a momentum shift. So we go to a 1 hour time frame. We'll start with the 1 hour. That's really, what we're looking for as a scalping opportunity. And you can see that we're flatlining everywhere. Okay, no real trades there. Very difficult to actually get in on anything. But when you start looking at it from the point of view of what it needs to break to actually get in, if it did happen to get up to around that 68 cent mark that I was talking about and break through that, that's going to give us the lightning bolt that we're looking for, the series of higher highs and higher lows that's going to give us the confidence that the momentum has shifted in an upward direction. And on the flip side, if we actually see a breakdown below that sort of 66.80 mark, which is actually not that far away, you'll also have a lightning bolt on the way down, which is a series of lower highs and lower lows, of course, and then we can start targeting that lower band. So that's really what we're looking for to actually get into the trade. It's very difficult to even scalp the Aussie at the moment. It's actually effectively going sideways, but if we get that move up above 68 cents, I think it opens up the top end fairly quickly. 68.80 in the first instance, then onto the 70 cent mark. But of course, if we get a close or a series of lower highs and lower lows and get below 66.80, then we can start to target the 65.80 zone, which is the next very serious support for it. But you're very flat trading and really hard to do anything with. So if you've been able to extricate any pips out of the Aussie, you've done really well this week because it's been pretty ordinary. But it did hit the marks that we needed it to. But now, like I said, it needs to do something before we can actually get involved. All right, US dollar CAD is the next one. This has played the game quite nicely. It bounced off the level that we wanted it to. We found support here at that 133.30, 20 area. As you can see, it basically hit the 20 moving average, which was the target. The 134.80 was actually the target, and it hit that basically in last night's trading or in the US trading session. So, really from this point onwards, it needs to basically either break past the 50 and the 20 moving average, which is going to be a close above the 135.20 area. If it does that, you're going to start to believe the story that it's going to go longer again. But one thing you've got to be very mindful of is not very far away at that zone is a lot of support and resistance. This is a very strong roll reversal area for it at around that 135.20. You can see all of the peaks. This is where it actually sold off from a few weeks ago. All of this support right through here, right through there. And of course, you can see the wicks, and even we had resistance around that point as well. So it's a roll reversal zone, no question about that. Very important zone, and also a visual psychological level. So as much as it needs to break that to go higher, and then we can be confident that the next level should be hit, which is around that 137, it's got a lot of work to do. It's got a 20, a 50, and also the very important roll reversal to break through. So I would allow it to do that before I would be getting involved. I wouldn't be jumping in on that expecting it to actually play the game. That's one of the ones that you definitely want to wait and see. In reality, we're still in the downtrend, right? There's no question about that. We've still got lower highs and lower lows happening, lightning bolts everywhere all the way down, and it's at a 20 moving average now. So realistically, if it is going to turn around, this is the level that you'd expect it to turn around from. So on the flip side of this, if we look for a trend down, if we start to see any weakness whatsoever around this level here, the logical target's going to be back at that 133.20, right? So To do that, of course, to identify a change of trend, we're going to have to go to a smaller time frame. So this is what the 1 hour looks like. Of course, it's hovering up and staying above the 20 moving average. If we get a series of lower highs and lower lows on a 1 hour and we happen to break down below the 134.50 on a 1 hour time frame, that's going to give us that mini reversal that we're talking about. Then we can start targeting that lower end around the 134 and then onto the 133.20. But it has to do it. It's not one of those ones that you want to be jumping in. You want to be making sure that it is possible that it's actually the momentum has actually shifted. And if it does, definitely an opportunity to get it back down to the previous low that we saw last week. So that looks like the path of least resistance in my mind, because up the top, we've got so much in front of us. It doesn't mean that it can't do it, but what it does mean is that I would be waiting for it to do it before I actually get involved. So close above the 135.20, and we're looking at long opportunities up to 136.80. And of course, if we see a small reversal on the 1 hour and we start to see a series of lower highs and lower lows, we can target the 134.20 in the first instance, and then on down to the 133.20 and 133.80 levels, these levels right through here. All right, over to the US dollar yen. And again, this one's done the job for us. This has gone up and it's hit the zone that we wanted it to hit, which is around that 135, just above 135. It did that. It's still floating around there. And look, it's definitely making a series. It's made the series of higher highs and higher lows. There's no question about that. We've got positive MACD now, and we're about to get a 2050 moving average cross, as you can see right through here. So that being said, we are at the next real zone where it could give us a few problems. We need to be mindful of this zone because it is a role reversal level, and it is also a round number that we do know that the yen does gravitate to. We're about to get that cross though, and we are trading above the moving average, so there's no real reason to be thinking that we're going to go short. But I would be waiting for a daily close above the 135, probably 135.50 really, to really break through this zone, and then we can start to target the 138, which is the previous high, and another role reversal. This has been very, very technical for a long time, the yen, so there's no reason to believe that it wouldn't be technical in the future. You can see all of the zones have held up perfectly. All of everything's in alignment. It's been a technical dream really to trade, and hopefully you're able to catch this little mini move that we saw from last week, because this was definitely our target, and our target has been hit. So if you're in that, you probably should be out already. But if you're looking for a new trade, as long as it's trading above the moving averages, look for a break above the 135. Of course, if it reverses here and closes below all of the moving averages, then we can start to target the 131 again. But it's got a lot of work to do before that, because now all those moving averages should act as support for it. Okay, over to the dollar index now, and look, after a bit of a resurgence last week, it's been a very, very flat week, as you can see, and we're still trading underneath the 20 moving average, underneath the trend line, and really, look, until it breaks that zone, it's going to be a very nothing sort of trade, really. Obviously, the yen's the one we're going to be looking at. Oh, not the yen, sorry. The Euro USD is going to be the one we're looking at in a minute. That's the one you would trade in this instance. But it's trying to break above the 20 moving average. And if it does that and it breaks above that trend line, we could see a bit of weakness in the euro, and then potential push up to around that 102.50 again. And then even further, potentially up to the 103.50, which is a very, very strong zone. But look, we'll move over to the euro. And as you can see, it's been relatively flat. A little bit of a sell-off, just as the dollar index went up, obviously. But nothing to be frightened about. You can see, obviously, we've still got the series of higher highs and higher lows. And while that is happening, there's no reason to believe that we're going to be selling off anytime soon past the 20 moving average until it actually happens. If we get a daily close below the 109 and below the, because obviously it has to be below the 20 moving average at that point, the next target is going to be the 108, which is 100 pips away from that. And you could definitely see that happening. That wouldn't be all that hard to do. So really, if we see a series of higher highs and higher lows on the euro, so a little mini break of this level, say if we break the 110, for instance, if we get a daily close above the 110, we can start to target the 110.80 as the first target for a long scalp up. But if we get a daily close below the 109 and below the 20 moving average, then we're going to start to target the 108. So really 100 pips either way, 80 pips to the top side. And both of them are very easy to actually get, because there's not a lot of resistance in front of either of them. It's just a case of which way it breaks. So look for the break of the mini level, and you get that, and you got a very clear target to go for. So not bad trading on the euro, but it still has to, we just need a little bit of price action to break through. And the last one we're going to have a look at, of course, is the S&P 500. This did the job for us again. Hit that target of basically the 4170 again. That was the previous highs. No worries about that, but it's been very, very flat. We saw a little bit of weakness this week, as you can see. A lot of doji candles, a lot of indecision, really, at a very important zone. We know that we're in an earnings period, so that's going to dictate a lot of what the market does. Really, it's very difficult to see a market, launch past a very strong resistance zone when the reporting hasn't been all that flash, and it hasn't been all that flash so far this week, and we've got some very big reporting next week coming in, so that's really going to dictate where this one's going. So my suggestions would be that if you are going to trade the indice, you'd want to be making sure that you're keeping your trades fairly short and sharp, so you're only wanting to be scalping. If you're looking for shorting opportunities, the first point of call is the 4100. That's the first one because there's the 20 moving average, of course, and a little mini support zone. And if for some reason it does start to trend up and it closes above basically the 4180 it needs to do, I wouldn't be taking that initial break because that could be a little mini fake out or just a news-related event. So I would let it break through and come and test it from above. Be mindful that we're only a week away from May, and traditionally May is a notoriously weaker time of year. So the chances of it sort of sinking down and traveling down are probably greater than it going up. But again, price action is key, right? So if we get a close above the 4180, we've got to look at it a little bit differently. But I wouldn't be taking the first break. Let's just say that I would be waiting for it to consolidate up there before we're looking at longer positions. And of course, if it continues on its way down, the first trade would be down to the 20 moving average. And if we do happen to break past the 4080 level, then we're going to start targeting really bigger lows down to the 4,000. But again, price action's got to do that. But be very, very mindful. We are in the middle of earnings season. So I hope everyone's had a great week's trading. Look, the opportunities have been a little bit dry. We've been pretty restricted in the movement, but we are starting to see a little bit of heavier pushing in the S&P especially. So we could be in for a little bit of fireworks as the earnings continue. Have a great weekend, everybody, and I look forward to seeing you all next week.